What comes to mind when you hear the word remittance or international money transfer? For a lot of people, especially here in Ghana, what normally comes to mind is Western Union or more recently, World Remit. One of those companies is a 160-year-old giant processing more than $70 billion in transfers annually. Another one, is relatively the newer kid on the block. What these companies have in common is that they are money transfer operators, also known as MTOs. Now, money transfer operators are usually non-bank financial companies, and what they do is they basically help facilitate the transfer of money from one person to another person across borders. What if I told you that a Ghanaian fintech company has slowly but surely been carving out a pretty big slice of this international money transfer pie? The fintech company is Zeepay, founded by Ghanaian entrepreneur Andrew Techiapia. To understand Zeepay and the significance of what they've built, we first have to understand a few things. Number one, the golden opportunity, the $530 billion international money transfer market that Zeepay initially got started off of. Number two, the grit and hustle shown by Zeepay's founder. Actually, not one, not two, but three failed startup attempts before eventually hitting gold with Zeepay. Number three, Zeepay's endgame, becoming the road that all the different players in the international money transfer space can effectively ride on. Now, let's talk about the international money transfer industry. Whenever the term international money transfer or remittances come up, most people will think about the Western Unions of the world, the MoneyGrams of the world. And what's interesting, once you kind of take a step back and you look at that space, is that a lot of these companies actually rose up due to specific problems at the time and opportunities at the time. So now let's go back in time. Back then, if you wanted to send money across borders, what would you do? Carrier pigeon? No, what people would actually do is they'd go through banks. So for example, if you wanted to send money to your relative in Ghana, let's say from the US, what you would have to do is you have to go to the bank and effectively tell the bank to send a wire transfer to your relative in Ghana who has to have a bank account. The banks would make these transfers using a really interesting system. That system was called SWIFT. Now, SWIFT stands for the Society for Worldwide Interbank Financial Telecommunications. And again, I know it sounds like the Illuminati, but it's not. SWIFT is actually a partnership of over 11,000 banks. So SWIFT allows the banks to basically talk in payments to each other across different borders. So think about it like this. SWIFT sets the standards that everyone has to play by. So at the end of the day, when you think about banks sending transfers between each other, what they're really doing is they're DMing each other. As the philosopher turned rapper Yo Gotti said, it goes down in the DMs. I mean, like right now, SWIFT processes up to 42 million transactions per day. So it's pretty powerful. However, there are a lot of problems with this bank through SWIFT through bank, then bank through SWIFT through bank system. For one, you have to physically go to your bank in order to make the transfer. Additionally, your bank has to be part of the SWIFT system, and your relative's bank has to be part of the SWIFT system. So not only do your relatives have to have a bank account, you have to have a bank account with a bank that is partnered through SWIFT. Additionally, your relative also has to have a bank branch that's within their proximity so that they're not traveling like 50, 100 miles, whatever. They're not traveling that far in order to actually access the money. Because again, those travel costs do stack up. Another problem is that in certain cases, it's not even Bank A and Bank B talking to each other through SWIFT. In certain cases, it's actually Bank A, and then between Bank A and Bank B, there's Bank D, E, F, G, a whole set of intermediary banks that are basically helping the transfer move. And as it jumps from one bank to the other, again, the middleman problem, as we talked about in the M-Pharma video, that happens here with money transfers. So at each point, the costs go up because there's more banks doing the transfer. The higher complexity with this means higher costs as well as higher fees. In certain cases, these costs can come up to almost 10% of the total amount that you're sending. So they're relatively high costs. Now, the answer to some of these problems was actually why Western Union and similar services like your MoneyGrams were actually invented. Somebody basically sat down and asked themselves the question: why do you need a bank account in order to transfer money from one country to the other? Western Union was born as a result of that question. What Western Union did is they employed something called the retail model, which basically is a fancy way for saying that they would go to a specific country, open up a variety of different branches within that specific country so that people would be able to actually go to these different branches and engage in international money transfers, right? So all of a sudden, instead of person A in the US having to go to their bank and have a bank account with the bank in order to be able to send money, they would go to Western Union instead, because Western Union was expressly built for sending money abroad. Whereas with banks, banks do a whole range of other things. Western Union would just be a money transfer operator, would just send the funds. So anyone could come in with different forms of cash or different forms of money, and they'd be able to send money from the Western Union point to another Western Union close to where their relatives were at a relatively cheap fee. How Western Union would make money would be on transaction fees on each individual transfer, as well as the differences in the foreign exchange rate, or as people like to say, the FX rate. Now, with 160 years under its belt, 550,000 agent locations across the entire world, processing more than $75 billion in transfers, Western Union is the leader when it comes to the money transfer operator space. However, that position was easier for them to maintain back when there weren't the changes that happened. Now, what are these changes? The internet, that's one. Increasing smartphone adoption, that's two. Another one, increasing network coverage in terms of like these mobile telecommunications firms, so your Vodafone, your MTN, in the different countries that they operate in. Now, all of a sudden, and this is the case here in Ghana as well, you moved to a world where a digital wallet can actually be tied to your mobile phone through what's called a mobile network operator, like your MTNs, your Vodafones. This is exactly what happened in Ghana. With these solutions, you don't have to go to a physical location in order to transact money. That transaction happens on your mobile phone. The mobile money wallet could handle all of that. Today, people expect that with a push of a button, money can be sent across borders. Now, with some of these changes, Western Union and other similar players were seriously caught lacking. So let's give us some historical context. Historically, sending money transfers by banks has been the most expensive option. Western Union came up and they made it cheaper. However, at the end of the day, Western Union, through the transaction fees and the differences in the foreign exchange, what they would do is they wouldn't be as transparent with the actual fees involved with sending the transfers, and they were really just, putting some extra percentages on top. They were just stacking it up like a percentage burger that was super packed with juice. Ultimately, because consumers didn't really have an insight into what the actual fees were, they were getting gouged. It got to a point where the G20 countries and the United Nations had to basically come together to basically say something needs to change. So what they did is, worldwide, they set a global aggressive goal. And that goal was they wanted to drive down the global average cost of sending a transfer from the high ranges, whether it be your 10% to actually 5%. So that was the goal. Now, if you're a money transfer operator like Western Union, that's effectively like somebody coming to you, and let's say you have toffee in your mouth, right? Like you're enjoying it. It's nice toffee, it's amazing. And then basically putting their hand in your mouth, ripping the toffee out, and throwing it on the ground. Against this backdrop of regulatory pressure and people wanting more options, Zeepay came out swinging like Mike Tyson with a remittance to wallet system. Now, the multi-million-dollar question, which actually led to Zeepay, was this: can you build a payment system that exists outside of the mobile network? Now, let me sprinkle some context on this like Salt Bay. So during those times, it was mainly companies like MTN or Vodafone who were actually leading the charge when it came to mobile financial services, because it was these companies that were basically producing the digital wallets that would be tied to your mobile number. So Zeepay did two interesting things. They built their own mobile money wallet, even though they're not a telco. The Zeepay wallet that anybody can subscribe to. 2. They built digital rails that connects digital assets. And let me break it down for you. So think about a digital rail as kind of like a road, right? Like it's something that connects things. These assets are places, right? So the assets could be your mobile money wallet, going to an ATM, bank account, your card. So what Zeepay did is they basically built a road that connected all of these different places to each other. In Ghana, the Zeepay digital wallet could actually accept transfers from abroad. This wallet would actually sit on top of all the other telco wallets. So instead of sending directly to, let's say, your MTN wallet, you can send it to your Zeepay wallet, where you can then choose to transfer it to your MTN digital wallet, transfer it to another person, go cash in somewhere, go cash out somewhere. So basically it was this kind of like, was a wallet on top of a wallet. The key thing here is choices. By giving receivers more choice in how they could receive and cash out their money, and building a system that enables that, gave Zeepay the power to go to different clients, whether that's your money transfer operator or even other applications like tap send, and effectively give them that superpower. The conversation goes something like this. Zeepay says to its clients, partner with us, and we will help you move money faster, cheaper, and better through technology. There's an old saying, if you can't beat them, join them. That's exactly what MoneyGram did. Now, MoneyGram is the second largest money transfer operator out there, and they decided to partner with Zeepay in 2018. Now, MoneyGram customers in over 200 countries now send money online or in cash to over 11 million digital wallets in Ghana, which could be cashed out at over 150,000 agent locations across Ghana. So Zeepay has been a success. It's growing. They're currently in more than 20 countries, from Ghana to Ivory Coast to whatever have you, and they're successful. But it's easy to look at Zeepay right now and think to yourself, it was always meant to be a success. But that's not always the case. If you look at Zeepay's founder, Andrew Tachiapia, what you don't see is the failures it took to get to Zeepay, the misses, the absolute L's. I like to bring up these L's to really highlight here on this channel that entrepreneurship is not this one and done game. It's not a one-hit wonder. You don't always just strike gold immediately. It's a process. So all those L's translated to hard-earned business knowledge, right? That all translated into Zeepay's success. Zeepay's story is far from finished. They're still growing, and it will be really interesting to see where they end up. So again, my name is Adum. This is the Palava. Here's a link to a video on mobile money, how it almost failed in Ghana. If you should check that out. For more content like this, follow the Palava, subscribe to our YouTube channel, all that beautiful stuff. Anyways, have a great day.